A huge thank you to John Malanda, the Head of Transactional Banking Sales for Business Banking at Absa Corporate and Investment Banking, for the opening and welcome address. And I think we are going to get ready into this arena, the Absa Growth Stage arena, and look at the warriors who will be coming onto the stage and engaging with us in this upcoming next item on the program. And that is the panel discussion, which we will be getting into in just a moment. It is themed Harnessing External Forces, Strategic Partnerships in the Face of Disruptive Change, where we do have the opportunity to examine how venture collaborations have the opportunity to foster agility, to serve as a buffer against disruption, as well as to drive innovation in the ever-changing landscape that we currently find ourselves in the ecosystem. And for this, ladies and gentlemen, I have incredible experts who are going to contribute to the conversation, and I'm going to humbly request that we hold our applause as we welcome them while I read their bios, and we'll do so warmly once we are all seated on the stage. Our first panelist is Mielani Maluleke, a senior economist for macro research at Absa. Mielani is a senior economist and leads the South African macroeconomics team at Absa. He has been a professional economist for over 13 years, having joined the bank in 2013, and prior to which he was a senior policy analyst at the National Treasury. Mielani, please join us on stage. And I believe you have some music which is going to usher you. Fantastic. Also joining the panel is Vuyolwethu Dubese, Head of Product for Distribution, Syndication and Insurance for Trade Product Management at Absa. Vuyolwethu is an accomplished professional with more than 15 years of extensive banking experience spanning finance, treasury and trade. She possesses an MBA from Gibbs and a master's in finance from Wits Business School. Currently serving as the Pan-Africa Head of Distribution, Syndication and Insurance at Absa, Vuyolwethu is deeply passionate about fostering trade within and beyond the African continent, and a dedication stems from a profound belief in the transformative power of trade to uplift societies and bolster economies across Africa. Ladies and gentlemen, let's welcome Vuyolwethu and her music as well as she comes onto our stage. Our third panelist is Pat Mokgatle, Business Development Director at BDO. Pat is a Business Development Director at BDO, having joined the company as a bursary student at 17 and has been an ambassador for the brand, and has also taken a key role in winning some big contracts and big projects since he has joined the Business Development Department. Also known as the rock star of accounting, he has given multiple keynote addresses at events such as the Finance Indaba, as well as the Institute of Accountants in Eswatini. Having completed his audit articles with BDO, he found his passion in building the business, winning, retaining, and sustaining it. And we are incredibly excited to have a rock star of accounting. Let's have his music as he ushers onto the stage in a very powerful red, representing the Absa brand. Ladies and gentlemen, rounding off our panel is Pascal Albrecht, Executive for Commercial Issuing, Relationship Banking Product at Absa. Pascal is a seasoned professional in the realm of commercial issuing within the banking sector and currently serving as the Executive for Commercial Issuing and Relationship Banking Product at Absa. With over 8 years of invaluable experience in payments, she has become a driving force in innovating the payments landscape, constantly pushing boundaries and seeking new avenues for advancement. She holds an honors degree in marketing management, providing her with a comprehensive understanding of consumer behavior as well as market trends. And additionally, she attained an advanced diploma with the Chartered Institute of Management Accountants, further enhancing her analytical prowess and strategic acumen. Her innovative mindset has been very instrumental in instrumental, in shaping the future of payments, as she is constantly exploring how novel approaches and embracing emerging technologies to enhance efficiency and customer experience. Pascal, please join us onto the stage. And ladies and gentlemen, let's give them a round of applause and welcome them to the conversation. And before we resume our panel discussion, let me extend an official invitation for you to join this conversation. A reminder that you can do so by logging in your questions by visiting slido.com, that's slido.com, and inputting the code 1287095, and that will enable you to be able to participate and, of course, submit your questions. Now, thank you for joining us today and for your time. And I want us to waste none of it and immediately sort of grease our elbows as we look to the partnership pathways and what entrepreneurs, what intrapreneurs as well, can be able to proactively respond as well as to engage with the theme that is going to be guiding us, and especially with the external factors that are impacting the disruptions of businesses. And before we get into the data, the policies, the stories that matter, which we are going to be hearing from across the room over the course of the day, let's underpin the topic. Let's underpin disruption. And I'm going to invite your opening remarks. And Meilani, perhaps I'll start with you. When we are talking disruption within the role that you serve, within the sector that you serve, what is disruption? And particularly its essence to its relationship with the touch points that you have with SMEs.
Yeah, good morning. It's really good to have an opportunity to engage with all of you. Look, I think from a macroeconomic perspective, which is the space that I operate in, and if I reflect over the last sort of 4 or 5 years, there's been a huge amount of disruption. And I think it's typically not the kind of disruption that you expect from a macro environment. And I'm going to give you a few examples. You think back to 2020, which probably now feels like a very long time ago. One of the biggest shocks that we've ever seen, hits us as a world economy, as an economy, as businesses out there. And of course, having to go through that as a business, as an economy, is in itself very challenging. But COVID also gives you the first wave of, I think, policy responses from a lot of countries that suddenly start to ask, is being too open actually really such a good thing? Should we become a little bit more inward looking? And now we're thinking about industrial policy. And that's an example, I think, of the kind of disruption that we've seen. But it hasn't ended there. I think even as we came out of COVID, I think for businesses that operate here in South Africa, of course, we've had infrastructure issues. We can get into details about that. That's been a huge source of disruption as well. But even externally, I think, the risk of further disruption, I think, hasn't gone away. One thing that I think has also become very clear right now is that the geopolitical environment is just not as stable as I think as we've seen over the past few decades, and it's become very difficult to know how things are going to unfold. So I think for us, from a macroeconomic perspective, as we sit here, sort of try to look forward, there's a number of issues that we're concerned about that we think will continue to be disruptive forces for the global economy. One is geopolitics. There's still a lot of friction out there. I mean, it doesn't make as much headlines anymore, but the Russia-Ukraine crisis is still ongoing. You've got tensions in the Middle East. It's difficult to know how those are going to unfold and what the implications for trade is going to be. But I think even a little bit beyond that, there's something that economists are actually now also starting to pay attention to now, which is AI, right? I think it's become clear that AI is no longer just sort of giving you a tool for when you want to take some shortcuts with your assignments. But it's actually becoming what we economists call, interestingly enough, GPT. So general purpose technology, I think the development that you've seen in that space has been quite rapid. And you're starting to see that, it's being adopted across a range of industries. And I think, economists are starting to realize that some of the productivity gains that could come as a result of that from, countries and companies that adopt AI, could also be sort of a disruptive force, I think, for the world economy in the decades to come.
Absolutely. I think a really great landing cushion to understanding, what underpins disruption from a macroeconomic outlook. But Dumelo, I'm going to invite your remarks as well. When we're talking disruption in the role in the industry that you serve, what does it currently look like?
Thank you so much for the question, Vuyo. So when I think about disruption, I quickly think around, we live in a rapidly changing environment, right? And the word VUCA previously was not necessarily at the tip of our tongues, but is becoming part of our everyday vocabulary. So we're looking at volatile markets, a lot of uncertainty, complex environments that we are engaging, as well as ambiguity. And in there are various variables that we need to contend with that are individually seeking attention from us, right? And I think where that is concerned, we then quickly realize that we, as Absa, for example, do not necessarily have all the answers, right? There's an opportunity for us to leverage partnerships in the market where there are amazing entities that are doing some amazing work that we can leverage. We don't have to necessarily answer every single problem that we are faced with on our own. And I think for me, it's key in that answering the question around how do we deal the question or the challenge of disruption in the market is that we need to partner with various institutions. And if we don't do that, there is a risk of disintermediation, particularly from a banking perspective.
Right. And I think what's already coming through is this nuance of disruption. Do we open it or do we close it? Is what from a regulation perspective? And then you're coming through also from a technology perspective, because we cannot talk about disruption without talking about technology, whichever type of technology that really needs to seep in through. And finance, Pat, that is an industry that has been incredibly disrupted and has been incredibly necessary when we're talking digitization, when we're talking disruption. So what has been the current outlook from your perspective in your role, in your industry, when we are talking to disruption?
Yeah, no, thanks for that. I mean, if you look at it holistically, back in the day, you were doing journals in a ledger. And you were using a pencil and erasing it, and we've gone past those days. Yeah. The disruption that comes into the space now speaks to, having live numbers. If I ask you what's your balance sheet sitting at, you're not going to call your accountant and it's going to come 3 weeks later and tell you what the number is. I log into my cloud system using Xero, which is predominantly what we use, log in and I can tell you where my numbers are today, because it's getting the bank feeds, coming into my books immediately, reconciling it, and I know exactly what's happening. So what you're seeing is a shift in what we used to say month end. Effectively, you don't even need to have month end because the system is actually working in the background. There's machine learning that's actually saying, well, macro is actually your supplier, macro has been matched, you just click a button, it's already sitting in your accounts payable, it's already sitting out of your bank, your income statement is updated. So that in itself then shows you that there needs to be a lot of agility in how we do things as opposed to waiting and saying, I'm waiting for month end. What we are also seeing is that if you don't disrupt within this space, you'll be left behind. And I'll give you an example of it. Takealot has been very comfortable in South Africa, and we saw as soon as Amazon launched, all of a sudden there was a panic, they were given discounts, there was a subscription, they were not doing it. Right. And the thing is, if you wait, you will be disrupted. That's the difference. If you wait too long, someone else will disrupt you and you will follow. And guess what? If you're following, you're chasing now. You're behind the pack. So it's important that you look 3-5 years ahead and say, how do I disrupt the entity or the industry that I'm in? But while you disrupt, just bear in mind that that disruption in itself is uncomfortable. So be willing to be disrupted as a business leader yourself.
Absolutely. And I think a theme that really sticks with me in your response is the programmatic systems that we definitely need to put in place in order to automate and in order to increase and optimize the productivity as well as the resources that we're going to be implementing into the business. Pascal, I'm going to come to you. We're talking payments. We're talking the future of finance. From a lens of disruption, Where do you currently sit in with that?
So I think COVID forced our hand quite significantly as a payments industry. I think being able to purchase goods online seamlessly with whatever product you wanted to utilize your card was in demand. And over and above that, this massive drive we saw towards contactless payments, wallet payments, those disruptors really turn things on its head for us as a payments business. And we are seeing that our clients are asking for payments to become a seamless integration into their day-to-day running of their business. They don't want it to be seen as this additional product that has to be, utilized outside of their day-to-day running. It should just be there running on the back end. And that's a big piece that we are currently looking at solving. The rise of tokenization and virtual payments, all of those sorts of things were, really expedited through the use of COVID. And as I say, clients, it's now becoming a hygiene factor for them. It needs to be seamlessly embedded into their business operations.
Absolutely, and I think interoperability is going to be a theme that's also going to come up, especially as we harness technologies to expand this theme of creating rather strategic partnerships to unlock the opportunity for disruption. Meilani, I'm going to swing the pendulum back to you. We've started to create this canvas and understand what disruption is and what it has been going through, the journey of disruption through various industries. You sit in a capacity where you have the opportunity to engage with various indices, various data, various policies that engage and impact how we look at the economy, the state of the economy, as well as the opportunities that are currently present for private and public sectors. From a current macroeconomic perspective, what is the outlook at the moment, and most importantly, the triggers that high growth SMEs and businesses that are in the room should be on the lookout for at the moment? Yeah,
look, I think one of the things that we continue to see, I think, in the global economy is that we don't seem to be finding a way to get back to the pre-COVID normal, if you will. I mean, if you just look at from a growth perspective, the IMF came out with its World Economic Outlook report, and one of the big things that they're highlighting there is that we continue to see a world economy that is growing slower than what we used to see before COVID. And in addition to that, we're also seeing substantially more divergence in the nature of this growth than we've seen in the past. So it's not as synchronized, as what we used to see. And I think that's kind of the broad outlook that we're looking at here. But at the very same time, I think there's also just a lot of risks that could bring about further disruption, I think, from a macroeconomic perspective. So, one of the things that we're trying to follow quite closely right now is, of course, the evolution of macro policy. Macro policy has been unsupportive for growth for quite a number of years now. Inflation has been much higher than usual in a lot of markets, and as a result, in a lot of markets, interest rates have been, their highest they've ever been in decades. Expected to come down, but that doesn't seem to be happening quickly enough. And then when you look on the public finances side of that coin, there's also now a realization that governments have accumulated a lot of debt over the past few decades, so there isn't the space for governments to play a big role in driving growth more directly in terms of fiscal expansion. In fact, the trend is more towards the reverse now, right? Trying to figure out how they can consolidate. And I think the implication of that will be that I think there's just less government spending growth going forward, and I think that's going to be quite significant for the world economy as well. But there's also, I think, just a couple of risks that I should just emphasize again here. One being that the geopolitical environment is just very different now. And you also now have the situation where this year there's just a lot of countries that are going into elections. I mean, we're one of them, of course. Yes. We'll be voting in just a few days. In just a few days. But you also have elections in critical markets like the U.S. Where it appears there's a real chance that that Donald Trump could come back as the president of the U.S.,
That's
coming back
disruption
into
alone.
this very fragmented geopolitical environment already, right? And what does that mean for the world economy going forward? So I think it's challenging. Policy, macro policy, is not going to be as supportive as what we've seen in the past, and I think we need to be cognizant of the fact that there's just still a lot of risks from a macro perspective.
Absolutely. And we are going to go back to those geopolitical opportunities as well, particularly as we engage in trade and what that would mean for businesses and SMEs across the continent if they are thinking about being effective in trade. I want to swing to you, Boy Dumelo, for this question, because Melanie has beautifully sort of laid out that there's multiple ebb and flows when it comes to this macroeconomic outlook and the environment that we're engaging in. But when it comes to financing and SME financing, unfortunately, there's no ebb and flow there. It's just moving at such a glacial speed to close the financing gap. In Africa at present, according to the African Development Bank, there's over $400 billion in terms of the funding gap that exists, and that's almost 50% of SMEs across the continent. Now, we recognize that trade finance as an asset tends to favor corporate businesses over SMEs, and of course, due to risk mitigation and for the institution to really optimize its resources. For Absa, what is its response in its strategy to stimulate investment and to stimulate growth for SMEs through trade financing?
Thanks, Vuyo, for that question. I think I'll swing back to my opening remarks, which was around highlighting the importance of partnerships. So what we are doing at Absa, or rather in the trade and working capital space, is we are being deliberate around seeking partnerships with developing financial institutions, export credit agencies, fintechs, and other financial institutions, as well as insurers, to solve for the SME funding gap, as you have mentioned. So if you look at the AFDB Afrexim 2020 report, I think is the one that you were referencing, it also talks around DFIs having played a significant role in making sure that SMEs or in availing trade finance related funding during environments where banks did not necessarily have appetite. So from that perspective, as Absa, we've partnered with the likes of ECIC, which is an ECA in South Africa. We are actively exploring that relationship to help our exporters in South Africa expose their trades to borders across outside of South Africa. So you would have also seen, I think last year in the market, there was an announcement around a partnership between Absa and the AFDB, particularly one element of it focusing on a guarantee for trade finance, but another element of it focusing on a loan from an SME perspective. So we actively seek out these partnerships. They have been very beneficial from an Absa perspective. We've got multiple relationships with development financial institutions. And I think just to point out something that you mentioned around the SME finance gap, which is around 480 billion. The impact of that is quite significant in that if you look at the contribution that SMEs make into any economy, close to 80% of businesses in the market are actually SMEs. And they're as well responsible for around maybe 60 to 80% of employment in the economy as well. So it is very important that we creatively source opportunities to resolve those gaps. We talk around the trade finance gap as well. I think 2019 AFDB report listed at around $90 billion. That has been steadily increasing, and it has been the result of COVID as well. So partnerships are very, very key. Fintechs, if you look at the African landscape as well, there are various partnerships where that is concerned. We are leveraging fintechs that have aggregating a capability on their side and a little bit more agile in how they execute, a lot better than what we do actually as a bank, because we've got legacy systems, we've got regulations that we need to comply with, which can be actually costly as well. So partnerships are actually very key in us unlocking some of these opportunities, particularly from an SME environment.
Absolutely. And it's funny because those challenges are red tape.
Yeah.
It's the red bank. But to your point around quantifying these numbers, because I think it really just begins to fill in the stories, fill in the narratives of what is possible when we are talking about the opportunities that lie in this disruption. And I want to continue with the theme of disrupting and financing in that, Pat, and bring you in particularly the sustainability of financing, the sustainability of the performance of a business, as well as investment readiness. And we bring in ESG into this conversation, but particularly the G in ESG, because that underpins the E and the S. And it's very critical for the performance of the business. We're talking, auditing, to tax strategy, to just the decision-making of a business. To SMEs, high-growth SMEs and businesses who are perhaps seated here and say, I'm ready to be financed, so I'm ready to even perhaps break through a higher threshold of financing that Vuyolwethu was talking to. What can they do to fundamentally be ready to become investment ready, if you will, at that?
I'll say it's your day-to-day runnings. And it sounds very cliche because, you're running a business, but you pretty much think, I'm fine, until you need to go to an Absa and say, well, Absa, I need 200 million. The first thing they'll say, okay, can I have audited financial statements? Can I see your projections? Can I see that from a governance perspective, you are actually, all your affairs are in order? Mm-hmm. Is your tax clearance fine? Have you paid your VAT? Are you actually filing your annual returns? Mm-hmm. And most of the time as SMEs, we forget those. And all of a sudden, we want to do all of those when it's now time for funding.
Right.
But actually, you should be doing it on a day-to-day basis. Mm-hmm. Know that your taxes are up to date, your VAT's up to date, your governance is in place, your policies are in place, because you need to be funding ready before you actually approach a bank or take it to the next level. Because when you take it to the next level, now you're going to be challenged. And it's quite interesting as SMEs, we'll always have our forecast numbers looking astronomical. They'll always look great. But when you look at the financials or your historics, they'll say, give us 3-year financials. The story is not the same as what you're projecting. So the prudence also is very important as SME owners to say, what does it look like? Am I going to grow this business at 20%? How can I have a CAGR of 45%? What is the basis of that CAGR? So challenge yourself internally before you even put together a deck to go out and say, okay, now I'm going to market and I'm going to look for specific funding. So it's very important and fundamental that we always look at our governance structure within our businesses and also know what am I going to use that money for? Right. Because the funder wants to know, okay, and there's a fundamental word in audit that we use, we call it going concern. And when we do a going concern test from an audit perspective, we're saying, well, will the business be in existence in the next 12 months? Solvency, liquidity, profitability, do you have contracts in place? And similarly, if you don't see your business as a going concern, how then does someone fund you for a business that might not be there in the next 12 months?
And Pat, I hear you, because what SMEs sometimes think that I'm too small to concern myself about ESG. ESG is something that Absa or bigger banks and bigger institutions should be concerned about. What is perhaps one thing that they can start doing today, walking out today to say, okay, from an ESG lens and from a governance perspective specifically, do I employ zero to pragmatically implement how my accounting could potentially work in the business? What is perhaps that one thing that they can start with today and start to eat that elephant bit by bit?
I think it's just fundamentally saying, you've got the SDGs, where do you want to focus? So if you specifically in a place that you're using a lot of emissions, how can you reduce your emissions? Because that will come up. And as you go for the funding, you can then show that my emissions was X, now I've dropped it to X. I'm actually giving towards the environment. We walked in this morning and I looked and I said, it's quite interesting. Back in the day, you'd get a full-on hard paper, and I looked at the actual, A5s that we're receiving today. We're receiving A5s that are biodegradable. So it's showing that Absa. So the small impact that you have in your space, because a lot of people think when you talk about ESG, it's across these big policies that you need to make, but look at the space that you're operating in.
Absolutely.
What can you actually say, okay, well, I think it's SDG 4 and 5 that I'll focus on and do it well, because that in itself is your story. Absa says your story matters. no matter how small or big. So go give that small story that you consider small as this is my story. I'm looking at SDG 4 and 5 only because as this is where I'm at, but I'll grow over time. Because there's no rubric, guys. There's no scorecard that says, have you covered everything from an ESG perspective? It's not at that level where you're getting marked. Homework is not done because you've only done 2 or 3. What impact can you make in your society, in your space that you're operating in?
Absolutely. And I think fundamentally it's also the match that happens between funder and fundee. You need to be matched with an institution, with a financier that really is matched to sustainability. Sustainability matters to Absa. It should matter to you as well. So I think that matching is also something that's pretty important. Pascal, the theme of digitization of technology is something that has risen, I think, throughout the points of our fellow panelists. But we're in a hyper-digital world. Trade technologies are amiss. And I think the post-COVID will really enforce businesses to prioritize the agenda of digitization. And, orbiting the conversation of digitization is customer centricity, stakeholder engagement, and the payment solutions that I think every business was in some way forced to be able to effectively trade and participate. And I think to Boitumelo's point, to not be left behind. Yeah. My question to you is, what do you say to SMEs and businesses who still have some form of trepidation to have a digital presence and are wondering whether, is this perhaps the secret sauce that I need in my business? Is digitization the secret sauce that I need in my business in order to effectively trade?
Yeah, so I think a big thing that we need to look at is, corporates and businesses nowadays are adopting digital, right? And I think they are paying lip service quite a lot to it. Digital is a culture, and it has to fundamentally sit at the core of any business's strategy. It can't just be something that you're doing on the side. It's got to sit within the core of the business. And I think leadership needs to have bought into that vision. That is a massive piece as well, because without the leaders cascading that vision down to the people on the ground, those people aren't going to be forced to start looking at things differently within their business. So I think that that's also quite key. And I think for businesses, especially the smaller businesses, digital can seem to be quite an imposing thing. Now, you're looking at your business now, you have to try to digitize to save cost and create efficiencies. And I think the big thing is partner. And I think, Boitumelo has mentioned how Absa is doing that, but I think it also applies to smaller businesses. There are a lot of businesses that you can partner with that can actually support that vision and that roadmap to getting your business to be more digital. And I mean, the advantages are huge. I mean, we know that there's going to be massive savings in productivity, enhanced client experiences. All of that will affect your bottom line in some way or another. But I do think that that is something that businesses need to consider. And I know that the challenge also comes in from an ROI perspective. And I know that that's sometimes why the culture agenda is sometimes, steered away from, because of the fact that it does require investment. And it doesn't necessarily mean just in monetary investment, but time and effort and skills need to go into this digital journey. And as any business, we sit down and say, well, what am I going to get back in return for that? And I think that narrative of that conversation also needs to change fundamentally to say, we are going to be putting in some investment now. We might only see returns in a few years' time. It might not be as quick as we want it to be, but that also, it might not always be a monetary return. That's something that you can easily track and measure. There might be other things like your client experience and your productivity, etc., that is all improved through it. So it's really turning the digital culture on its head and really starting to embed that into every single operation within your business and to talk about it more comfortably with your staff.
And is it perhaps, I love the fact that you bring in staff, because is the conversation nuanced enough? Because I think when we're talking disruption, and especially for small businesses, the excitement of AI and AGI and more acronyms for ChatGPT that are coming through, and perhaps that's where the trepidation or the conflict rather arises of, I'm going to, the ROI measures is looking at, do I really go for it if I'm going to lose staff? Or even from the staff perspective, do I really encourage, my team to really fall on and use these technologies? What do you say to that?
So look, it's a big challenge when you look at digital, is this resistance to change, this fear of being replaced by AI. I think it's also how a business approaches it. And I really do think that looking at areas where you can automate, where you can then actually take away the mundane tasks that aren't necessarily adding value from a warm body perspective, and then redirect your warm bodies to doing tasks that are actually going to add value that the AI can't actually do for you right now. So I think it's really unpacking those opportunities within the business and having those conversations with your staff to say, we might not going to be sitting in a call center answering calls anymore. We've got a chatbot that'll do that for us, but this is actually what we want you to do that's now going to revolutionize our business. Like, sit down and really look at the process and see where you can make things more efficient, more beneficial to your end client, because they've got that level of experience in dealing with those clients. So I think it is a balancing act, and it's not a difficult, it's not an easy thing to manage.
Absolutely. And to your point, it invites the conversation of culture and expanding what that truly means for your organization. We are going to be shortly logging on to Slido and see what questions that you have. So I do want to encourage you to enter the code that is 1287095. That's 1287095, and we will be incorporating the questions, should you have any, towards the end of this discussion. Mielani, I'm going to come back to you, we talked briefly about trade and, these geopolitical influences and factors that are currently happening, particularly on the continent. In one of the PMIs of the bank, it stated that one of the improved developments was the improved sentiments for the future conditions of doing business. And when we have initiatives like the African Continental Free Trade Area Agreement, it literally is a breeding ground and an open invitation to collaborate and to do that through trade. But we also have, in South Africa and I think almost 17 other countries in Africa, where you have political movement which could negatively impact trade. One of the ways in which Absa is engaging and stimulating its relationship with SMEs is economic growth through trade. What is the current opportunity for SMEs to actively participate in this market? How large is this market, if you could quantify this for us? And of course, what challenges exist, or these invisible export barriers, in order for SMEs to participate effectively in trade?
Yeah. Look, I think the opportunity in the continent is pretty immense in my view. So, I mean, just to place a number on this, in the latest IMF estimates, the size of the African economy is around $3 trillion, and that's the estimate now. It is also expected to be one of the fastest growing regions around the world. So, that opportunity is just going to get larger over time. And I think there was a recognition years ago, I think, as you point out, that I think freer trade in the continent, I think, could be one of the opportunities in which, we unlock that growth potential even further. I mean, the Africa Free Continental Trade Area, I think, is a fantastic opportunity, for unlocking competitiveness in the continent. But as you point out, I think, there's been a lot of barriers. Infrastructure obviously remains an issue in the continent. I'm not just talking about physical infrastructure, but also institutional infrastructure. But I don't believe that there should be hindrances, I think, to doing trade. And certainly as a business out there, I mean, one of the things that my colleagues are talking about here is building partnerships. And I think we need to realize that that's also quite critical in terms of how one thinks about navigating that environment. Having those relationships with partners who understand the landscape a little bit better than you do, spending time understanding the rules and regulations. And I also just want to give another quick example here of something that Absa does, is one of those ways in which we build partnerships that help us to understand what's going on and just try to improve things. So in a partnership with OMFIF, we do something, we do an annual financial markets index in the continent. And the purpose of this index is not to sort of get to the end of the day and say, oh, you know, this country is doing better than that country in terms of its financial architecture, but is to actually create an opportunity for engagement, you know, with policymakers and authorities across the different parts of the continent in terms of, you know, what is it that businesses are saying are issues? How can you do better? You know, and you know, how do we partner with you in doing that? And I think that advice would also be true for businesses. You know, just build those strategic partnerships that allow you to have, I think, you know, better conversations with policymakers, and I think, you know, those partnerships that allow you to understand a little bit better what is going on in terms of the landscape across the region.
Absolutely. You bring through infrastructure and the various forms of infrastructure, but also the architecture that is necessary, particularly for the area agreement to be successful. And in this point, Dumelo, I want to pull you in, and I think even continuing with this theme of the agreement, and fundamentally looking at an infrastructure of digital, which is such a great opportunity for SMEs, for businesses, for multiple stakeholders to be able to have an opportunity to engage in. And it is in its teething phase. You've got standards, digital standards that are currently coming into place. So there's so much opportunity for them to be able to actively participate. What is the bank's response, or rather their ask to SMEs to keep in mind when they are talking about digitization? And I think even the preparedness of digitization as they are going to be embarking on this journey and hopefully sign more agreements and partnerships across multiple countries.
Thanks, Vuyo, for that. I think from an SME perspective, digitization or digital transformation has the potential to introduce additional funding opportunities. As you mentioned, the SME funding gap is quite large, and it is not something that can be resolved by one entity. So you require multiple entities to actually get involved in that conversation, hence the partnerships with DFIs as well that have been instrumental. So I think there's an opportunity for SMEs to position themselves to take advantage of funding opportunities. Crowdfunding is something that is actually quite available in the market and growing. And I think with the with increased activity in digital conversation or digital trade between two parties, there's an opportunity for other funding platforms or other funding avenues to make themselves available. I think second to that, it also begs the question for us as Absa to say, the digital instruments that we have available in the market, as well as our understanding of how SMEs and our potential clients use digital instruments, how can we harness those to understand the client better? One of the factors that is responsible for the SME funding gap is actually information asymmetry between the banks and the SMEs themselves. So through digital instruments, we are then able to source the relevant information to help us understand our client better, help us curate better products for the client that will actually solution for the client's problems. Another matter that has been cited in the market is around not adequately solutioning for the client problems. So where a client requires a 3-year facility, we end up giving a client a 1-year facility. But through a digital instrument and our ability to get better insights on the client, we are then able to also predict better what the client needs are going to be and solution for those proactively. Managing various things as well. I think our ability to understand the client better and solution for the client better not only helps us protect the bank, but also helps us protect the client and helps us build sustainable relationships with the client. So that's very key for us in that when we are solutioning correctly to make sure that both institutions are still in place, in the foreseeable future. To Pat's point around, a going concern, that is very, very important to us. And as we grow as a bank, we are then able to further help other SMEs. So we don't just stop at that one particular SME. Our ability to understand and generate the necessary information in the market helps us reach other SMEs as well. And I think it's quite important to say, where SMEs are concerned, there isn't a one solution that fits all SMEs. Right. SMEs are quite nuanced in the various challenges that they're being faced with. Some SME require upfront cash to be able to assist with their startups. Some actually SMEs require quicker turnaround times from a payment perspective, and that's where banks can also come in to help solution for the business. So there are various ways in which both the SME and the bank can harness digital transformation to understand one another better, but actually to also solution for the SME better.
Absolutely. And I think, one of the ways that we have been talking about disruption has been not only digitization, but the various forms of technology. But one question that I think comes through that really syndicates to what Pat was talking to when it comes to investment readiness, but also Boitumelo when it comes to financing as well, is a question from the audience, and it reads, giving that Africa is a young continent and not a high emitter compares to established companies, what should our posture be on ESG, especially the S? So we've covered the G, but from an S perspective, what matters to high growth SMEs? What matters to the institutions that you're going to be bidding to and saying, I need your partnership, not just your financing? But Dumelo, I'll hand it over to you if you can unpack that question, and then Pat also, if you'd like to expand.
Look, I think it's something that we are actively focusing on within Absa as well, from an S perspective. And that speaks to our ability to reach the various SMEs. As mentioned, the SME funding gap is a focal point for us. So how we then, we partner with other institutions as well, fintechs particularly, from an aggregating perspective, that are able to reach the client a lot quicker than what we are able to. As mentioned, agility is quite key in the conversation for SMEs. So from that perspective, partnering with fintechs, but as well partnering with the DFIs that have similar ambitions to what we have. I think if you look at the DFI mandate, it's all around economic development. So where that is concerned, we actively look for opportunities in the market to uplift certain entities, to partner big institutions with smaller entities, to give access to the smaller, to give smaller entities access to the local supply chains, but as well as global supply chains.
Absolutely, Pat.
I quite like the partnership that you're speaking about, because if you look at the S in itself, South Africa is the most unequal country in the world. So effectively, we should be looking at how do we partner, but how do we also give back, but not giving back as a handout. And I think that's very important and fundamental, that we're not giving back to say, okay, here's a 350 every month, how are we going to sustain that?
Right.
How do we then say, how do we open businesses within the townships, within the rural spaces, so that people don't have to move out of the township, come into the urban space, and then travel back, where your salary actually ends up from the commute. So we need to start saying, how do we build up? If you look at countries like Singapore, 30 years ago, they were exactly in the same situation as South Africa. So what are we doing in order to make sure that from a social perspective, how do we uplift South Africa? How do we get SMEs out of the incubation stage? A lot of businesses put businesses in incubation, but post that, how do I go to market? Can I actually be a supplier for Absa? Can I be a supplier for Absa's suppliers? Can I be a supplier for the people in this room? So how do we then cascade it to a point where it moves from just being South Africa, from the townships, from the rural, to the rest of Africa? How do we export a product from South Africa all the way to Europe? At the moment, look at how many products are coming out of Europe into South Africa, but how many of our products are actually going out? So we need to look at it fundamentally and saying, from a policy perspective, what kind of policies do we put into place? I'll give you a simple example. I mean, most of you might have seen that there's this new thing that pops up every 5 seconds called Temu, and buffaloes in the play and everything, and you're getting these. They are pumping a lot of clothing manufacturing out of China into South Africa. Where are we pumping clothing out of South Africa? From the Transkei, where you used to have more hair, where you used to have merino sheep grazing the fields, to export to the rest of the world. So that in itself speaks to policy. How do we then lobby DTR to say, look, put more tariffs on that, so that actually we discourage the imports, and we export more? So importantly, when we look at social, it can't be handouts. It needs to specifically say, how do we have businesses, sustainable businesses, that are tailored, that are coached, that are taken through from being an incubator for 18 months. After 18 months, that business is nowhere to be seen. So it's important that we start, and also collaboration. It's not possible to run a business alone. I mean, the businesses that are in this room probably started as a one-man show, but now you've got 100 people. And in that, in itself, there's disruption that happens. You need to actually say, well, times have moved. We've got millennials in the business. They understand the digital landscape better than me. Lead it as a CTO. I can't be a CTO. It's impossible. Let the new generation lead. And it's important that we have the learning spirit and the ability to be disrupted as leaders.
Absolutely. We've got a couple of questions coming in, but I think I'll round the conversation around disruption. And Pascal, I'm going to hit this question for you. And it reads, digitizing and AI has security risk. The increasing cost of IT security, risk of funding and hacking is a big concern for small businesses. What would be perhaps your advice to SMEs who share this concern?
Cybersecurity is actually one of the bigger trends we are seeing within the digital disruption space, in the sense that the hacks that are actually happening have increased, and they are increasing annually. And I actually read a study by IBM not so long ago where they're saying that actually 60% of businesses don't believe that they have a cybersecurity threat, even though the amount of attacks are increasing by more than 30% year on year. And small businesses are at 3 times of a higher risk of being hacked than a bigger company. So cybersecurity is a massive, massive piece that needs to be catered for in any digital disruption conversation. Again, I think it's also around partnering with people who are more skilled in dealing in cybersecurity, to be able to have those robust strategic conversations around what elements of your business need to be protected and at what level. So I think that would be my biggest piece of advice when it comes to cybersecurity. And also do your homework. I think don't put your head in the sand and think it's not going to happen to you. I think read up about it, understand where the simple gateways are in for these hacksters to come in and hack your business and to get hold of all that information. And also don't see the governance and compliance frameworks as an impediment to you doing your business. I think a lot of those things are there to actually protect businesses against those sorts of threats as well, to make sure that you're thinking about those elements when you are running your show.
Absolutely. Now, unfortunately, we do have just over a minute remaining, so I'm going to invite some closing remarks from our panelists. But I do want to integrate this question in the closing remarks and bundle these two questions. When we're talking about, disruption, digitization, the future of Africa, the question that reads here is that, is Africa ready? And so what does the data say to support your closing remarks of how we could look at how do we create shared value partnerships by looking at the data and the stories that matter? Meilani, I've been starting with you, so I'll continue. I'll continue the tradition in your closing remarks.
Yeah, thanks. So, look, as I said at the start, I think the global backdrop is a little bit difficult. I think it's got a lot of risks. We dealt with huge supply chain issues a couple of years ago. Those could come back. I think there's various risks that could bring those kinds of issues about again. And to the more critical question, is Africa ready? How do we build resilience to those kind of talks? I think we have a platform, right, in the Africa Free Continental Trade area, right, to build further resilience. I think as a region. But I think it's also clear that I think there's just still quite a bit more that we need to do. I think in order to realize, I think the vision of that trade agreement. So, my closing thoughts here would just be to say that I think as businesses out there, you just need to be aware, of course, of the risks. But I think to also stress the point that my panelists have been making here, that you need to build those partnerships in your industry and outside that I think put you in a better position, I think, to be able to navigate some of this disruption that is coming through from the global environment and even here in South Africa, of course.
Absolutely. Boitumelo?
I think for me, the question is Africa capable? And I think if you look at the type of interactions that are taking place from a fintech perspective on the continent, for me, the answer is definitely yes. So research shows that around 90% of trade on the African continent still takes place through cash. To Mielani's point around the AfCFTA and some of the systems that are coming through, like PEPs, those are fostering digital cross-border payments between parties. So the capability is definitely there. The partnerships definitely exist. If you look at what M-Pesa is doing in West Africa as well, partnering with the likes of Access, you look at what MasterCard is doing, partnering with MTN from that perspective, or investing in an MTN fintech. I think the opportunities are definitely there. We do operate in fragmented markets, which is something the AfCFTA is trying to solution for. If you look at the digital protocol framework that has been recently introduced, it is trying to solution for that by putting together a set of principles, standards, and rules that will govern digital trade across the continent to support the AfCFTA agreement. So plenty of capability, I think, is around the willingness to come together and apply common set of rules to unlock those opportunities and support and enable digital trade.
Absolutely. We have the capabilities. We are ready. Pat, your sentiments as we close the panel discussion?
Yeah, from my perspective, I think the question should be, are we ready to take charge? Because if we're ready to take charge, then it should be through our actions. There's no point in us having these conversations. We leave the room and we do what we did last week. Are we ready to take charge and take our businesses to the next level? With the partnerships that we've discussed here, with the conversations that we're having around the room, it's important that we realize that for us to grow our businesses and take our business to a different level, we have to be different individuals. And it all boils down to, are we ready to also give the succession to the next generation? Hand over that baton, you've burned that business. Is it time now to give it to a generation that can take it to the next level? Because sometimes what limits us is our ability, because we've reached our ceiling. Sometimes you need to bring in fresh blood, fresh generation that will give the business new life. So are we ready as a continent? I'd say yes, provided we are willing to actually lay out the plans and take it to the next level.
Absolutely. And I think to your point, we are the youngest continent, so we probably should be doing that preparation. Pascal, to round off, we are ready. The capabilities, the opportunities are there. The young people are there to be able to hand over the baton of disruption. How do you see that?
So look, from my view, I think as Africans, we do tend to sell ourselves short a little bit. We always kind of say we're behind the developed countries. But I think if you have a look, especially like, for example, within the payments world, we're one of the best payments systems in the world. And I think we've got to give ourselves a little bit more credit for what we actually do have. And yes, I think we're ready. I think we've got the skills. I do think as a collective working world, we need to try and figure out how we drive the adoption of that technology in unison, and how we can use it as enablers for the smaller businesses as well. So yes, I think we are ready.
Absolutely. Ladies and gentlemen, we are ready, and I think that deserves a round of applause. Thank you so much to our panelists. Let's give them a mighty round of applause as they exit the stage. I think a brilliant conversation, really harnessing multiple call to actions, as well as some of the strategies that we can harness to look at how we can transform our businesses to become disruptive powerhouses, be it through digital, be it through technologies, the cultures, and the fundamental factors that are going to be incremental and incredibly important to how we are optimizing that transformation. Once again, a huge thank you to Mielani Maluleke, Boitumelo Toka, Pat Mokhatle, as well as Pascal Albrecht. Ladies and gentlemen, we now are going to move into the next segment of our program. But before we do that, I do want to echo John's words of Absa's new repositioned brand to the market of Your Story Matters, being about empowering Africa's tomorrow together, one story at a time. And ladies and gentlemen, through this video that we are about to watch from VSL Manufacturing, which is a client and partner of Absa, I hope that you feel inspired, and not only that, but are reminded that not only do partnerships matter, but so does your story. Enjoy.